Shane Eade and his wife Ann of Jamestown, North Dakota say that when they bought their first house in 2004, they were totally unprepared. With a combined income of just 45 grand and student loan debt topping 60 grand, the Eades had an unfavorable debt to income ratio. But with no pre-qualification process nor an experienced mortgage professional to stop this blunder, the Eades managed to buy this 3-bedroom house that was way out of their budget. Then they spent the next 2 years barely scraping by. The Eades hope others can learn from the mistakes of their first-time home buying experience. So with me is Trevor Curran, blogger and loan officer. He says he's seen a lot of first-time home buyer mistakes in his 23 years of experience. He's here to tell us about some. Welcome, Trevor. To start, what is one big mistake you see people make, particularly when it comes to their credit?
Home buyers go into the home buying experience, they want to wipe the slate clean. They pay off all their credit cards. This can work against you in getting your loan approval.
What? How so? That would be a good thing, I would imagine.
We lenders, we're assessing risk. We're looking to see that the risk of lending someone several $100,000s is worth it. So we're looking at the credit, not just at the credit score, but how you use your credit. And you're actively using your credit cards every month.
And how many? You have a target?
We like to see 2 to 3 trades active for 12 to 24 months.
A lot of people want to get pre-approved before they go house hunting. Is it just that simple?
An important first step in the home buying process, but not so simple. The pre-qualification process isn't an instant credit report and a conversation with your loan officer. The experienced loan officer that you work with should look at your tax returns, your pay stubs and your bank statements, and review those to anticipate any obstacles in the loan approval process.
And you've really stressed the importance of a good loan officer, but don't you just get whoever you're assigned when you walk into the bank or mortgage bank?
You are not stuck with whoever you first meet. It's important that you interview your loan officer as you would any professional that you work with.
Why is that even important, and what would you look for?
Experience. At least 15 years experience. A loan officer who was in the business prior to the boom and the bust.
Trevor, another thing you say a professional can help you work through is if you want to use pension or retirement account money. But this can actually work against your ability to qualify. How so?
If you take a loan against your pension and you're repaying it, certain loan programs require us to count that monthly payment in your debt-to-income ratio. This could prohibit your qualifications.
Say you have your loan and you go to buy your house, you warn people against buying what you see as the wrong house for a first-time home buyer. What is that?
If you're looking at a foreclosure, you're buying someone else's headache, you're competing against a cash buyer. If you're buying a short sale, you're going to wait a long time for an approval, and you may not get the price that you think you're getting for the house. In my opinion, the right house for the first-time home buyer is a homeowner who's motivated to sell. The deal can be had if you negotiate, and if you're working with a good loan officer and a great realtor, their professionalism and experience can guide you accordingly.
All right, Trevor, thanks so much, and we want to hear from you. Have you ever made a real estate blunder? Tell us about it. Connect with us on Twitter at Yahoo Finance using the hashtag DestinationHome. And for Yahoo Finance, I'm Lauren Lister.